So I'm Dan Weaver, I'm Head of Innovation for Equifax UK. I work in the product team, and there's a big focus at the moment on all things open banking. So I've been working probably for the last 2 years on the Prelude to Open Banking, and for then the last 12 months working with Mark Robson here.
Hi everyone, it's Mark Robson, Head of Open Banking Commercialisation in the UK. So I should probably explain what that means, because you've heard a little bit about HSBC today. So I have a very small team. This isn't the 100 to 150 developers. This is 1 or 2 colleagues, and we're trying to effectively take advantage of other banks' APIs and commercialise them.
So just a little bit on who we are as a company. So you might know Equifax. We're a credit reference agency in the UK and globally to banks and lenders. We supply data and products and services for credit risk assessment, affordability assessment, ID verification. So that's kind of like the core Equifax activity. And in relation to open banking, we have open banking programs, not just in the UK, but Australia, Canada, the US, India, Spain. I can't remember them all. So it's becoming a global thing for Equifax, as it is for everybody else. And within the UK, we're partnered with a company called AccountScore. AccountScore are a registered account information service provider through their company Consents Online. And they would be here today, but there's only space for 2 of us. But we work with AccountScore that they access the open banking data and pull in that data, categorize it. We combine that with Equifax data and analytics, and then supply it to organizations such as HSBC.
So as Utier mentioned, we were amongst the first to market with a live open banking use case. Globally, HSBC obviously is pretty big, almost 40 million customers across the globe. RBWM within the UK, 12 to 13 million active customers across these 4 brands. All quite different brands, all quite different propositions. The thing to flag here is that we have live, or we're developing live, open banking use cases across all 4 of these brands. If you look at the market share on the right-hand side, you can see for mortgages, for example, we have 6.4% market share within the UK, slightly higher in lending deposits. And one of our strategic intents is to grow that market share to our natural share, given access to a broker market.
I suppose to start, and I think there's been quite a number of mentions of the value exchange. So above I've got a slide showing kind of like a mortgage application process, could be a loan, unsecured loan. But this isn't just any mortgage application process in this example, it's my mortgage application process from 5 years ago. And I was a first-time buyer, applying for my first mortgage, and we'll go through that as and when I did back 5 years ago. So I sat down, first of all, the wife made me sit down and work on the credit application together. We went online, filled in a bank's application form, asked for name, address, date of birth. With that, the bank did the credit check. We come back, and that was successful. We then entered our income and expenditure information, and my wife went straight through, and that was all fine and got approved because my wife banks with the bank that we're applying for the mortgage, but I actually bank with another bank, and so I got to the point that I was referred, or I needed to provide additional documents to progress that application. So a letter then arrives a couple of days later in the post. I forget about it until my wife reminds me that I need to act on this. And so then I go into my online banking, and I print off copies of my bank statements from my online banking. I then follow the instructions on the letter. I send them to a PO box number. And then probably about a week later, I get another letter back from the bank saying, you've just copied these printed them off from your online banking. These aren't original copies. We can't accept them. I've gone paperless. I'm trying to save the environment. This is a modern thing. So anyway, so a couple of days after that, then I go into the bank. I nearly named them then. And I talk to an advisor, and they say that basically you've got to request them. It can take 2 or 3 weeks. And by the way, you need to pay us £30 for the privilege. So with no other option, I do that. And then kind of like a couple of weeks later, or 2 or 3 weeks later, I get these copies of these original bank statements, At that point, I'm on holiday with my wife in Greece. And so that's not the best. I've got the agent from the estate agent phoning me up going, you risk of losing the house. And I'm not coming back just to do this. I've saved all year to go on this holiday. So then, kind of like a week later, get back to the UK. I've got my original copies now of the bank statements. I send them off to this unknown PO box number that's got all my personal information, and I don't know what they're doing with it. And I get to the point that we've got the magnifying glass, and I assume then an underwriter would have gone through, assessed my credits, basically done the categorization that Uccio referred to in their heads, look at the expenditure side, again, look at classifying that into key expenditures, and then made that decision, which after 6 weeks in duration, and part of it was my fault, but the banks didn't make it easy. I actually got the house and didn't lose it in the end, so that was all good. But if somebody would have offered me the chance at that point in time to say, would you like to share your open banking transaction data digitally and securely, then to me there was absolutely no choice. I would have jumped at that chance.
That's quite a story. I wonder who he banks with. So yeah, open banking. What can open banking do here? So if you're in a referral journey, as Nick said earlier, we would offer a customer an option now. So send us 3 months pay slips, send us 3 months current account statements, or perhaps you could click this button and enter our open banking journey with our fintech partner, Consents Online. We'll pull in your transaction data, it's enriched, and then we can make a faster decision. I'm not sure about the minutes, but the decision will be faster.
And kind of like, we're on a path at the moment from manual-based paper slips, sourcing them, and then we're moving towards the automating of that process, so the sourcing of bank statements in real time. But the pay slips and bank statements are still being reviewed by the underwriter, and then we're now looking at kind of what can we do to automate that process as well. So
the live proof point is M&S Bank. So customers are offered an open banking journey. They can submit their documentation using open banking. Great news for customers, very simple. With 90-day consent, we could potentially repull that documentation such that we do not then need to go on to bother them further down the line if it did take up to 6 weeks for whatever reason. So there's a wonderful customer story here, removing friction and open banking. If you've already deployed the solution, you can really turn it on across your brands as we've done. So in terms of learnings, as I said, so Uche mentioned that we partner very effectively with Consents Online, AccountScore, and Equifax. The proof of concept back in March started small. We've expanded across our brands. It's worked so well. We really have, I think, now got a robust understanding of the robustness of the APIs. What's important is that the open banking, this value exchange we've spoken about, we do present it as an option. We never force a customer down an open banking journey, but it's very compelling. If you're at a point of referral and you're presented with that button, click here for an open banking journey. If it's app to app, 80% of our applications are mobile-based for the lending journeys. It's simple. Triggers app to app, it's done in seconds. The next step, though, is scaling. So if we think about the journey we're on, we've now pulled in this enriched data set. Where can we go next? We can pull in credit card data in September. That's exciting. But we can start to handle and automate some of those income verification and affordability referrals that ordinarily would be passed to an underwriter. We can take out some of the manual workload. So the vanilla income verification, some vanilla affordability. We can handle those on an automatic basis. But it depends upon us understanding that enriched data set. And there's a secret here. By combining with Equifax, we can combine bureau characteristics with the enriched transactions from the open banking data pool. Ultimately, where we're heading to is treating new customers like existing customers. So we can give a new customer the same journey, the same turnaround time, the same benefits as an existing customer has with HSBC now.
And so expanding from that journey, we're not going to just stop there. There's lots of use cases that have been discussed for open banking, and this is just some that kind of like the most common to Equifax and AccountScore at the moment in the lending journey. Income verification or income estimation, I'm going to cover that in a bit more detail in a few slides. But affordability, combining the income and the expenditure data, obviously the bank statement is a great source of data in which to do that. Creditworthiness assessment, credit risk. You can see from the transaction data you've got leading kind of like alerts into somebody's credit risk that could potentially overturn a decision. So on the negative side, you could see things like recent taken out of a payday loan in the last couple of weeks. You can see evidence of high gambling relative to income, bank charges. Not all of those things are in that person's credit report. On the positive side, for somebody who's a thin credit file, you can see their income, where they're employed, how stable that income is, all things that could positively impact that person's credit score and change them from a decline to an approved, potentially. Credit scoring is a next kind of like step on that, to take these individual insights and combine them into a score-based system. And this is one of the problems we're having in this one, is that coming up with a holistic data source in which to do it. And so this is where the banks, I think, have a great advantage, because you already possess big current account portfolios containing many millions of rows of transaction data. So leveraging that, your internal data, to build scores that combine transaction data, credit risk data, credit reference agency data, and banks' internal data. You've got anti-impersonation, so the fact that somebody can effectively logs into their online banking. So the open banking journey requires the bank to authenticate that individual. That is a positive identification of that individual, and only I know the password to my online banking. I don't know my wife's online banking passwords. She doesn't share them with me. I know her mother's maiden name. So we think it's a very good check as an anti-impersonation that can form part of an ID verification solution. And lastly, collections and recoveries as well. It's not just account opening. We're seeing lots of interest in solutions that could go through the credit cycle all the way at the back end. Collections and recoveries, so again, affordability, kind of income and expenditure, but just mapped to a standard financial statement as opposed to a credit application. And again, just on the right-hand side, I think this is where the banks have an advantage again. You can both receive that data from open banking, so basically take other banks' transaction data, but you also have your existing customer base, and so we're seeing kind of like solutions moving both ways, potentially. From open banking, we could deploy the same solution on our current book, or alternatively, you might have a transaction data score based on your current book that you could look to deploy on your new to bank and for using open banking. And kind of like the customer journeys that we're looking at the moment. There's over 30 clients live using the Account Score Consents Online system, and it does cover a wide range of different sectors. Everything from mortgages down to payday, high-cost short-term credit loans, everything from kind of like new peer-to-peer innovative lending through to traditional credit unions. So it really is kind of like no limit to which customers can benefit from open banking and transaction data. Second half of the presentation, I've got a few slides on income verification in particular. So open banking, you get the transaction data because the consumer consents for you to retrieve it. The next step in that automating that process is to make the underwriter's job easier, or even potentially to go beyond that and verify an income using this transaction data. So in terms of the regulation, I'm not a regulator, but the way it's written, I think it's strongly advisable to collect income and verify it in all cases, both for unsecured credit and secured lending these days. The FCA, there's just a couple of lines there. Income can include other forms of income other than just salary and wages. So you could potentially include things like benefits or rental income. And they also mentioned that it's generally not sufficient just to rely on the evidence, the self-declared evidence of a customer. So verification is very much needed in the industry today. And I think basically there's three common methods of income verification used. Bank statements and pay slips been used for decades, how to verify an income, get the bank statement. And that's in effect exactly what we're doing with the open banking, we're just finding a better, easier, more customer-friendly way to source that bank statement data. Number 2 on that list is current account turnover. So each of the 3 credit reference agencies in the UK takes a data set from the banks that contains the current account turnover for that account. And the current account turnover is basically every credit that goes into that account, but it doesn't have that granular breakdown that you can see the salary or split up that income. So that's used very widely for unsecured credit, but not so much for secured, because it just doesn't offer that granularity and precision than compared to a bank statement or a payslip. The last way, previously declared incomes, but I think I wouldn't class that as verification. That's just being a consistent income declarer. So is the future of income verification open banking? We think it potentially could be. And so we've come up with an approach to verifying or estimating an income using transaction data. And point number 1, you've got to get the data. So you can source that through open banking, or alternatively, if you're a bank, you might already have that data available. Number 2, as Uchiyo mentioned, absolutely key into this is categorizing the transactions. So AccountScore have a very powerful categorization engine that has been trained off millions and millions of rows of transaction data from a wide source of banks. So whichever data set comes in, we get a very accurate categorization code to every transaction. This transaction comes in, it's wages. This transaction, benefits, things like that. Once you've categorized all the transactions, look at the frequency and source of income. These things aren't available in the Cato data. I can't tell from our traditional data sets how frequent people are paid or what their employer is. You can from transaction data. Then look at the stability of the payments. So what we see, and I've got a few examples coming up, is that income and salary is nowhere near as stable as we might believe or hope if you're in my point and trying to build a solution. Not as many people are paid month end as you might think. So you need algorithms then to cater for those different cases. Then finally, step 5, once you've assessed all those metrics, then calculate or verify, or both, the income. So in terms of sourcing that income, some stats from AccountScore Consents Online. Are customers providing the account that their salary is paid into as part of the open banking journey? And our evidence is overwhelmingly yes. And that's been one question, because it's up to the consumer to consent to provide their account. If they've got multiple accounts, they can tick and choose which accounts to consent and supply, and choose to not supply accounts if they so wish. But 95% of accounts that are passing through the system to us, we're seeing more than £500 per month in terms of credit turnover. When you then look for salary payments, that figure drops, but we're still seeing a high proportion of salary payments in those accounts. It can be 70, it can be a little bit higher than 75 in times, depending on the sample, but consumers are supplying their salaried accounts. And that's not entirely unsurprising, because that's what we ask them to do as part of the process, but that's been one of the kind of like questions is, will consumers share the accounts that we want them to share? And then this is going to be difficult for you guys at the back, but the point of this slide then is, so we've got the data, we've categorized it, and then you end up with different buckets of income. So the Cato data solution that most lenders use today for unsecured lending, all I get to see is the blue bar, the total credit turnover. I can't see the breakdown to say, well, actually, in here, there are gambling winnings, there's payday loans coming in, there's benefits, there's pension, cash deposit, transfers, and salary. So in this example here, the salary payments are only 40% of the total credit turnover. And so this is the view that we're lacking today in many cases, in that we only see the credit turnover, not the breakdown into these salary components. And so just having this available just means that you can much more precise estimates of income. And last couple of slides, this is just there to show salary frequency, and just a couple of examples here. The bar chart on the left shows employer-type gig economy. Now, we don't see the employer at Equifax, so this is the first time we can go to that transaction, find the company, Equifax Limited, that is making the payment into my account, then we can classify that company into the particular type of business that they do. So we've got on the left-hand side gig economy, companies like Uber, Deliveroo, and on the right you've got public sector, but you see the big green bar shows multiple salary payments per month. So in the gig economy, those people are getting paid multiple times per month. And when we look at the stability, you say they're being paid multiple times different amounts. And so this needs to be taken account of when you estimate the income. Compare that to public sector, and there's more, 60% in our public sector sample are paid one salary payment per month. In those cases, it's a lot easier to estimate the income. And then this final chart then just says the variability in the salary, to kind of emphasize that point, is to say the top bar, the very top there, says look at a string of 3 salary payments, how variable are these payments? Within the public sector, we've got 45% of the sample have a very consistent salary amount. When that's very consistent, it's very easy to estimate the income. But when there's lots of variability in the salary payments, 1,000, 4,000, 1,100, it gets a lot harder to estimate what that person's income is. And so these kind of analysis and breakdown, we just haven't had a chance to do before because we've not seen this data. So this is where we just believe that the open banking will deliver better affordability assessments through better income verification and expenditure analysis, and that should lead to better consumer outcomes as well.
So in summary, so it's enabling us to make faster decisions, and the benefit for the customer, I think you can all see that. We have started small. It's proven such a success that we've broadened it across all our brands, across products. The data is very rich. It's as good as a categorization. You have to prove to yourself and convince yourself that you've got a robust API set of data. But once you've done that, you can automate your decisions. And this has multiple benefits for both the customer and the bank.
Yeah.
Thank you.
From my perspective, is that we're beginning this journey on transaction data analysis. We've got a long way to go, but I think we're doing a great job in income verification. You also need to look at expenditure and credit risk and all of those different types of assessments. So there's a lot of work that we need to do and looking forward to doing in kind of like creating these solutions that will deliver better outcomes for the consumer and also better kind of credit assessments, affordability assessments for the bank. So it should be a win-win from both sides. That's it.